Hey everyone, Rob B here with Rob D from the Property Podcast. Now, we get asked all the time, where are we in the property cycle? And is the property cycle broken? Well, in today's episode, we're going to answer both of those questions.
Welcome to the Property Podcast, where every Thursday morning, property investors come to be informed and inspired. Yet always popular when we talk about the property cycle. And I've got to say, when we were looking at the data to prepare for this episode, I was shocked by what we saw. So we'll be talking all that through in this episode, and make sure you stick around to the very end when we've got a book recommendation to help you reflect on your life.
So it's time for our news story now. Well, actually, news stories, because we've got two for you, you lucky things. The first one, Rob, is a note on the eviction ban being extended again.
Yep, and not for the last time, I reckon. So it was due to end on the 22nd of February. It's now been extended till the 31st of March at the earliest. It's going to be reviewed in about a month's time, at which point they'll make a decision about whether to extend it again. If I were a betting man, I would guess that they probably will, because while things seem to be going in the right direction, there's still a way to go yet, and it's going to be potentially politically unpopular when they do start allowing evictions again. So probably one that's easier to put off for a little bit longer. On the subject of policies being extended though, stamp duty is another one that's in the news. Stamp duty holiday could be extended by 6 weeks, according to a source in The Telegraph, Rob. Do you think it's going to happen?
Wouldn't surprise me. 6 weeks is not a lot, and it's just another deadline that some people, again, will miss. So I can see it being an easy win for the government, something that will be popular. But 6 weeks, there'll just be a new group of people who'll also just miss out. You put a deadline in, and there's always going to be people who miss it for one reason or another. And property, if anyone's been through a property transaction, they will know there's always something that slows down your transaction. So I think it's a positive piece of news, but not a game changer. When I read the headline, stamp duty could be extended, I got a bit excited, then followed on with the by 6 weeks, less so. But I suppose it's a nice positive win for those who are close to completing on a transaction and will take that stress away. Although this is just could be at the moment. We haven't had any official announcements. But if it happens, I'm sure it'll be a nice, easy win for the government and a small group of people who are quite happy.
The 18-year property cycle is a concept that we have talked about many times on this podcast over the years. It's by far the most popular concept we've ever spoken about. It's something that investors find very useful, and it's also what we get more questions about than anything else. The most common of those questions being, well, where are we right now in the 18-year property cycle? Once people have understood what the cycle is and why it might be useful, they might be able to come to their own view of where we are in the cycle, but they want to know what we think. Now, of course, people have been asking this more than ever over the last year. Because first of all, there was COVID. And as soon as that hit, we started getting questions like, well, has this broken the property cycle? And indeed, we put out an episode in mid-2020 called Has Coronavirus Broken the 18-Year Property Cycle? Then property prices grew by a huge and unexpected amount over the course of 2020, as it turned out. So then people started asking us, is this the peak of the cycle? Well, of course, the answer to where we are is going to change over time. But today in the podcast, we're going to give our view on where we are today in 2021. We're going to talk about how the cycle has performed so far and why we believe we are where we are and what you should be doing as a result of that. But first, if this is the first time you're coming across this concept, don't worry, you're not going to be bamboozled because we're going to start with an explanation of what the 18-year property cycle is.
Yeah, if you are brand new to this, then it's well worth spending your time over on the Property Hub website and accessing our free course over there, which is about the 18-year property cycle. It's free to access, no catches. Just go to propertyhub.net, go to the education part of the website, look at the university section where all our courses are, and access it, watch it, and absorb it, because it's a really powerful concept once you know and understand it. But to give you a high-level overview here, the 18-year property cycle was popularised by an economist called Fred Harrison. And the basic premise is that this 18-year property cycle has been happening for hundreds of years, and he's gone back and mapped it through all data available to demonstrate that property cycles in the US and the UK go through 18-year cycles. And in those 18-year cycles, what happens is that after you have a crash, you have 4 years of nothing. The market is just bumbling along the bottom. Then you move into the next phase, which is 7 years of modest growth. At the end of those 7 years, you have a mid-cycle wobble. That mid-cycle wobble can last from 2 to 4 years. And then you go into the next phase, which is the 7-year boom phase, where property prices on average grow at more than any other point of the cycle. And of those 7 years, the final 2 are called the winner's curse, and that's the part that people fear, because if you buy during the winner's curse, then you can get burnt, because that's the end of the cycle, and what happens next is a crash, and we all start over again.
Yes, and when it does start again, the next cycle starts from a higher base than the start of the previous one. So if you zoom out and look over the long term, property prices go up because each cycle starts from a higher point. But along the way, you've got these gyrations. So if you do buy during this winner's curse period, eventually in the next cycle, you can expect prices to come back above that level. But of course, you would far prefer to buy at the low point so you get the benefit of that growth far, far earlier. It's worth saying as well that this is not just a spooky coincidence. There are sound reasons why this pattern plays out, which is all to do with land prices and economic cycles, and we get into that more on the free course that Rob mentioned earlier if you want to know more of why this happens. And it's also worth saying that this is not exact. The 18-year part is an average. Some cycles are longer, some cycles are shorter. So this isn't something you can just set your watch by. The point of the cycle is to give you clues for what might be happening, and then you can go out into the world and look for real-world confirmation that that is indeed the case. You shouldn't just be blindly saying that you're going to buy and sell in certain years based on counting up from 18. So lots more we could say on the cycle and have said on the cycle in the past, but that should be enough context for you to understand the rest of this episode. So now we can get on to the main question of where we actually are in this cycle. Well, to really answer that question, we need to understand when the cycle should have started. So even if you knew nothing about property, you could probably guess the answer to this one, because everyone knows about the financial crisis of 2008. And that is when we last saw property prices crash, along with lots of other asset prices. So property prices bottomed out during 2008 and started to pick themselves off the bottom slightly in 2009. So we're taking 2009 as the first year of this cycle.
And as a reminder, at the beginning of the cycle, you have 4 years of it bubbling along the bottom. Not much happening in the market. So let's double check. Did that play out? Well, in 2009, and all these numbers that we're referring to today are from the Nationwide Price Index, and we use this as our source consistently throughout to keep it fair. In 2009, property prices went up by 3.4%. Now, 3.4% might sound like a decent year, and in isolation, it's not bad. But remember, in 2008, we had a huge crash, seeing a massive fall in property prices. So 3.4% is just a very, very minor recovery and nowhere near making up for what went the year before. In 2010, property prices barely did anything and grew by 0.5%. So really not a great year at all for property prices. 2011 was 1.1%, and 2012, not a great year, property prices dipped by 1.1%. So over the 4 years, the average is less than 1% growth, which, as I've said already, is less than inflation. So the first 4 years very much mapped against what you would expect for the 18-year property cycle. So at the end of 2012, the media was not very bullish on property, you could say. It was actually incredibly negative. People were staying clear of property. So, of course, this was the perfect time to start up a podcast called the Property Podcast. And moving into the next phase of the cycle, 2013, is when our first episode aired. So nobody wants to talk about property, but yet we turned the microphones on. And that coincided with what should be the second phase of the cycle, which is 7 years of modest growth. So, Rob, what happened?
You say coincided, I say caused. No, it wasn't necessarily the property podcast that revitalised everyone's excitement about property and got the market moving again, but 2013, what a turnaround. So the previous year, a fall of 1.1%. 2013, growth of 7.1%. 2014, 8.3%. Now, if you go and look at regional prices, you'll see that it's London and the South East that is doing all the heavy lifting here. That is where the growth is happening. But that's a bit of a side point. We're sticking to the UK average here. And it goes on. 2015, 4.3. 2016, 4.5. So those years really showing the pattern of modest growth that the 18-year property cycle would predict. And then things start to slow down, but that growth is still there. 2017 was 2.7%, 2018 was 1.3%, and 2019 was 0.8%. So by the end of that period, growth not looking that exciting at all. But if you take the average of those 7 years from 2013 to 2019, the average annual growth was 4.1%, which is, in my book, Rob, modest growth.
It certainly is. But during this period, we also have the mid-cycle wobble, which is expected if we follow the 18-year property cycle. And we've said already that lasts for 2 to 4 years. And it's probably lasted somewhere in the middle of that. 2017 wasn't a great year for property prices, 2.7%, but certainly 2018 and 2019, very much mid-cycle wobble territory. Well, what happened then? Well, quite a lot. So you've got the course to refer back to if your memory's a little hazy. But two main things. One, you have the media starting to say property's had its day again. And two, you have stimulus. Because the government and the institutions don't want this roadshow to end. They've had some nice modest growth over the years, and they don't want it going backwards, and it starts to look like it is. But that stimulus is what drives the next 7 years of the cycle, which is the boom phase. And we'll talk about some of the stimulus that we've had in a moment. But 2020 then should be the first year of the boom cycle. So what happened? Well, according to Nationwide's figures, the first year of the boom 7 years, we saw property prices grow by 6.4%. So we've only had 1 year of the boom phase. And I'm sure many people will say, oh, it's a one-off. It's very convenient. And we have to admit, when we mapped all these numbers out, this does seem incredibly convenient and almost too good to be true. But it very much comes across as the beginning of the boom phase cycle. The data supports it. So the two main questions we get asked: is the property cycle broken, and where are we? Well, this data absolutely supports the fact that the property cycle, where it is currently, is not broken and very much alive and kicking. And two, we are just going into the second year of a 7-year boom cycle. Now, Rob, I have just said it, but this does seem almost too good to be true. It's like we've made these numbers up, but we really haven't.
No, it is a bit convenient, isn't it? We actually went back and looked through the Nationwide data together before we started recording, and I was shocked, to be honest, to see this exact mapping. It looks like we faked it quite badly, because like I said earlier, the 18 years is an average. You don't expect it to be exact, but based on the cycle so far, it does seem to be almost exact. And yes, insert a bucket load of caveats here. It matters where you start counting from. It matters which data source you're using. And if you want to see a pattern, you're far more likely to see it. But even with all of that, it's looking pretty good. So when we did that episode back in the summer of 2020 asking, is the property cycle broken? If a crash had happened at that point in 2020, as almost everybody predicted they would do, as we covered a couple of weeks ago on the podcast, then yes, in that situation, it would have been completely broken. We would have said, okay, well, COVID was such a big deal, it messed everything up, and that's it now. If 2020 had been another nothing a year, which, to be honest, is what we said it would be, so we're a bit wrong about that. If it had been another year like 2019, where it had gone up 0.8%, then you'd say, well, this is really stretching it now. This mid-cycle has been going on for a long time. Is the boom ever going to come? And there would have been really solid reasons for saying, no, the boom's not going to come. You could say that because of interest rates being pinned at zero, because of interventions, because of this and that and the other, property prices weren't allowed to fall quickly enough. After 2008, they bounced back too quickly. Or affordability is already stretched. We're already near the end of a long-term debt cycle. For all these reasons, there can't be a boom. It's not going to happen. So it's just going to fizzle out. And therefore, the cycle is broken for that reason. And you know what? Those arguments are still in play because we have only had 1 year that looks like a boom year. That's 6.4% in 2020. Is that going to continue in 2021? What kind of a year are we going to have? We don't know. If prices fall or they increase only slightly, then you can start feeling iffy about the 18-year property cycle again. But all we can talk about is where we are right now today, and we're in February 2021. The property cycle appears to be alive and well.
So markets just don't rise for no good reason. There has to be things driving it. And we've talked about already that stimulus is a big part of it. Now, if you've not listened to last week's episode because the title didn't look too sexy, please do. It's hugely important that you understand the concepts that we've talked about in that podcast, because that is going to be one of the main drivers, if not the main driver, of the next part of the cycle. Most people will not predict a boom because it's silly to do so. It's going against the norm. And in our episode 2 weeks ago, where we talked about why predictions are not so good, or crap, as I think we referred to, people do, when they make predictions, just do more of the same. It'll be a bit more of this, or it won't be that. It's very hard for people to go, right, well, we're going to be going into this new aggressive cycle now that's not gone before. You have to be very bold to do that, and you're more likely to look silly because you're talking about something that's not gone before. So the last 2 episodes, if you've not listened to them, should be very much on your to-do list, because you may end up more open-minded to the boom phase, which is what the 18-year property cycle says is to come. Another question you might be asking yourself is, what should I do? Well, right now, if the 18-year property cycle is correct, then now is an incredible time to buy. Last year was obviously better, but you are about to go into a boom phase. Now, some people may be having cautious thoughts right now, going, well, what about that crash? Well, here's the good news, is if the 18-year property cycle plays out, and that crash does happen, then you're going to have numerous years of growth. And what the cycle shows us is that if you are investing at this phase of the cycle, that the growth you will have after this point will more than make up for the falls at the end. And actually, it's only those who buy in the last 2 years of the cycle who normally end up worse off. And that's why it's called the winner's curse. But we are quite a few years away from the winner's curse yet. So if you use the 18-year property cycle as a guide, it should give you confidence in making investments. But whatever you do, you should view this as a long-term game anyway. And it's not like you're invested in a wild commodity or stock. You're invested in property, which is a lot steadier. And even if you buy in the winner's curse, as Rob said, the next cycle will end up higher again. So depending on what you buy, you may have a few years that don't go your way. But ultimately, if you hold for the long term, you'll be looked after through capital growth. And Rob, it's only after looking through this data that I'm starting to wish we could go back and revise our predictions, because I think I went in at 4%, which was at the top range of what anybody was predicting. But if the 18-year property cycle is alive and well, then you would expect to see growth of over 5% this year, at the very least.
You would. And I went lower, I think, from memory than your prediction. And that may still be right, because we've got to remember there are a lot of headwinds still in 2021. There is a lot of uncertainty. So it's possible that once the stamp duty holiday ends and there's still economic uncertainty and there's still job losses and things like that, it will be not a terrible year for property, but a nothing a year for property. And it takes some time for the stimulus measures to really feed through into the market. And so you get a quieter 2021 and then it kicks off again. And if that did happen, it wouldn't jeopardize the whole nature of the cycle, because remember, this is a broad outline. It isn't every year has to match up exactly. But it is also entirely possible that things just keep going. As we're recording this, news about infection rates seems to be good, vaccine seems to be getting rolled out well, and there's every chance that if the world gets back to some semblance of normality in 2021, there will be some kind of boom. But here's the thing, you can only know in retrospect. Until 2021 is over and in the books, we won't know what the numbers were. You can only really assess the cycle looking backwards. It's very easy to wait and see what happens and then go, oh yeah, I should have invested in 2012. But that's not very helpful if you didn't. So is the cycle a useful guide? Well, yes, it has been historically. And according to what we've gone through today, it still very much is. But you've got to use it in conjunction with looking at the world around you, looking for clues, looking at the macro picture, coming to your own views. It's only by doing that that you'll have the confidence either to invest or the confidence not to invest. But you should be doing one of those. You should be coming to a view that, yes, I believe the time is now right, or a firm view, no, for these reasons, I believe the time is now wrong. The default option is to be a bit unsure and therefore do nothing and just put it off and not invest at all. Not investing deliberately for firm reasons is a perfectly valid thing to do, but not investing because you're a bit unsure or you don't know enough or out of fear is not a valid thing to do. There are lots of people who will have been in that position ever since 2009, thinking it was a false dawn, thinking that prices had further to drop. But as we've seen, if they'd used the 18-year property cycle and combined that with other sources of knowledge and their own views, they would have positioned themselves really well.
So that's where we are today, and who knows what the future will bring. But we will bring it to you when it's present. So next year, we will revisit the 18-year property cycle again and see if we're still on track. And even if you've heard us talk about the property cycle a few times over, it might be worth going over that course as a bit of a refresher to really understand on a deeper level why this market moves in the way it does. Because it's one thing accepting it, but understanding it is a lot more powerful.
All right, time now for this week's success story. I love this part of the show. This is where we get to say well done to a property podcast listener for their achievements and inspire everyone else at the same time. This week's success story came in on Instagram from Anderson Rentals, who says, "You two are the definitions of good mentors. You've helped me out over the years with your podcasts, and I think I've listened to well over 250 of them now, and you've taught me so much. Since listening to you guys, I've done 3 flips and got a buy-to-let with more in the pipeline." Keep up the awesome work as you're helping many other people like myself keep on track and motivated. Well done to you. Listening is all well and good, but taking action and doing those flips and getting that buy-to-let into the bargain is brilliant. So well done to that, and thank you for letting us know. If you, yes you, have your own success story, then please let us know. You can let us know on all the socials. We're at Property Hub UK, or you can leave us a review wherever you listen to the podcast. However you do it, we'd love to know about it.
So it's time for Hub Extra now, the part of the show where we give you more. And Hub Extra, of course, is backed up by the Property Hub weekly email. If you'd like to get that bundle of goodness into your inbox each week, then make sure you sign up on the Property Hub website, become a member, and you will get that email. So this week's Hub Extra resource is a book. And I've started quite strongly on books this year. I'm really pleased with the progress I'm making and the book choices I'm making too. And the reason I'm making this book recommendation is because I too got a book recommendation via a YouTuber called Ali Abdar, who's rather popular. Go and check his YouTube channel out. It's very, very good. But one of his books of 2020 was called A Million Miles in 1,000 Years by Donald Miller. And this is the story of a writer who's approached by Hollywood screenwriters to say, let us tell your life story. And when they started to put that to paper, it turned out that it wasn't a life story that was particularly interesting or inspiring, and it made him really reflect on his life. So he decided to live a better story. And I'm recommending this book now because, as Rob mentioned earlier in the show, as we record this, things are going in a more positive direction, and that's brilliant. But COVID has also presented an opportunity for us all to reflect. We've gone through a period of time now that's been very strange, and for many of us, it's given us those moments to reflect, whether chosen or forced. And this book is perfect for that reflection and making you reflect and also making you plan and feel inspired by the future. And it's a book that is enjoyable to listen to, but it's also really inspiring and made me question, where in my life am I not living a good story and where can I live a better story? And I think after the last 12 months that we've had, this book will be perfect timing for a lot of people. So highly recommended. I listened to this one on Audible. Made me laugh out loud, which probably made me look weird when I was walking around on my daily exercise. But a really good book. Highly recommended. Give it a listen or a read.
Literally downloaded it while you were talking, Rob. Be good to check that one out. But if you do the same, you're going to have to fit it around with plenty of property podcast goodness, because we're going to be back next week with Ask Rob and Rob on Tuesday and another big episode of the Property Podcast on Thursday. And don't forget, there's also our other podcast, Any Other Business Now. You can find that by searching Any Other Business on YouTube or wherever you listen to podcasts. And that is now coming out on a Monday. So we've got your listening week well covered. For today, though, that is quite enough. So thank you for listening, and we'll see you next time. Bye-bye.
Bye-bye.